Okay, traders, so what actually is a profitable strategy, and how do you know when somebody's profitable, when they're not profitable, based on their results, and what can you actually expect as a profitable trader in the live markets? So I'm going to kind of break that down based on my Telegram group results. And what you'll often see if you are somebody who has a Telegram group, as I have done for many, many years now, and I send the trades I actually take in these groups, you will see a influx of people when you have a profitable month. Then you will see a massive exodus of people when you do poorly for a month. And when I say poorly, I don't mean like minus 20%. I mean break even or anything less than the previous month. And this is why 99% of traders never make money in the markets. And I'm going to break down some stats for you here to show you my strategies, and based on my strategies, profitable strategies, what you can actually expect in the markets when you are trading live. And the reason I'm using the Telegram group as an example is because I can see from the data that people make less than 5%, 10% in a month, assume that the trader is bad, and then that also translates into their own trading. And if they don't make a certain amount of profits, they then quit trading. They then increase their risk. They go off the rails, basically. So what I'm going to show you here first is the results from my Telegram group. And this is obviously a little bit of a plug because I'm showing you the group results and saying, you know, it's a good strategy. But the main reason I'm showing this is because I want to show you how realistic trading actually looks like. You can see that we had a very, very nice winning streak here. And during those 3 months, we were able to return, 17.5%. We were up around 18.5% even at one point within 3 or 4 months. But then, like any strategy, it's never going to be perfect straight line with profit, especially if it's one strategy. Multiple strategies, that is definitely possible, but just trading one strategy, that is not possible, in my opinion, and the way I trade anyway. So there are going to be times where you have to just focus on the long term. So what you can see here is January 3% profit, February 12%, March 2.5%. So you obviously had a very, very good start to the year. If I finished trading there for the year up 18.5%, 12 days into March, so around 70 days into the year, we were up 18.5%. If I just stopped at that point and said I returned 18% this year, everyone would have been happy. But, they expect that per month. So then you obviously have a bit of consolidation. And from that peak at 18.5%, we're only down 2%. But then you see so many people leave the group. And the reason I'm actually speaking about this, about people leaving the group and everything, because I want to remind you about the average trader. They have their $500 account. They risk 2% per trade. They're risking around $10 per trade. And they would have seen some nice profits after the first few months. And what they do is they start risking more. As you know, a beginner trader, they experience beginner luck. They'll start making profits, they'll increase their risk, and then they'll hit a losing streak and lose it all. Then they either blame the markets, they blame trading as a scam, label it as a scam, or they blame the signal people that they're following. And this kind of sums up trading industry as a whole. So if I actually show you some other equity graphs from my strategies, I actually have one that I used for a recent video actually. And I'm going to break this down even further. So if I just get the equity graph, this equity graph here, you can see quite clearly that this is a profitable strategy. But what you don't realize is this is over 100 trades. So it obviously looks quite nice looking over 100 trades. But let's say you were in a Telegram group, or this was your own personal account. Just put this into perspective. 22k here, down to 17k. So this is a 5% drawdown. So if you're trading a 100k account, you're up to $122,000 in the account. Everything's going perfectly. You're now down to 117,000. But let's say the graph just stopped here and you just see this downwards push. Are you going to then be like, oh, well, I can't trade this strategy anymore? because now it's just lost. It's had 3 weeks of losing, 2 weeks of losing. I'm actually going to quit trading the strategy. No, because if you did that, you don't get the benefits of the rest of the profits that are actually coming. And again, if you stop trading here after this, 4% drawdown, you wouldn't have reaped the rewards of all of this profit. So what you need to expect in your trading is losing streaks, and you need to accept the fact that that is going to happen. And I can tell from the data, and that is why I brought that up in this video about the Telegram group, because I always come into my videos backed by data. Everything I say is backed by data. So when I said that traders quit after a small losing streak, that is true. That is true. So you watching this video might not be that type of trader, but you got to realize that it comes to a point with a strategy. It's not going to be perfectly profitable every single week, every single month, every single day of the year. That just is not going to happen. The way I see it is if you have a yearly drawdown that you don't go above, then you can be very, very happy with your strategy. Let's say you return 20% for the year, but you had a 5% max drawdown. Wow, you lost 5 trades in a row. Okay, but you returned 20%, so you had a 4 times return on your investment. And again, this is what you need to realize. It's not going to be perfect. S&P, for example, does it go up every single year perfectly? No, it has dips. It has times where it goes up rapidly, but it also has times where it crashes rapidly. But you don't see people jumping out of the markets and saying S&P 500 is a scam. No, because you can look at the long term. You can see, okay, over the past 100 years, it's done this. Then that gives you confidence. Whereas if you go into your trading with no confidence in your strategy because you don't have data to actually back it, then no wonder you don't have the confidence in the strategy to take the trades and to not quit because you don't know that it works. So go into the markets expecting the next trade to lose. That's a good thing to do. Expect the next trade to lose because in worst case scenario, you knew what was going to happen. And if you win, perfect scenario. You made profit and you weren't expecting to make profit. So now you've made profit and it's even, a bigger bonus. The reason I say you expect to lose on every single trade, very, very simple reason, because you're going to risk accordingly. If you go into a trade expecting it to win, you're going to risk according to how much you want to make if that trade wins. But what you need to think about is how much am I comfortable losing when this trade loses? And when I say when this trade loses, not if this trade loses, when this trade loses, this is what I'm comfortable losing on the account. Then your trading will be, when I say simple, I don't mean very, very simple as in like, it's just going to be easy, plain sailing. That is definitely not going to be the case, but you definitely need to be mindful of the fact that you're going to lose. It's not going to be a straight line to the moon on your equity graph. And just keep that in mind when you are in rough patches. If you lose 3 trades in a row, if your risk reward is good, 1 trade gets you out of that. So just keep that in mind when you are trading. And yeah, hopefully you take the advice I say and add it to your trading. And I'll catch you guys next time.